council members that you'd like raised. Councilmember Glidden.
So I just would like to understand what's the role then that finance staff is playing in reviewing the TIF part of the report. So there's kind of two big parts of this report. One is kind of evaluating the TIF proceeds and providing a report on that. And then the second one is one that seems a little bit more kind of some terms of art, or however we're going to look at development projects. And I guess I have never seen us before actually rank development projects. I kind of think, frankly, it may be more beneficial to look at sort of some tiers of projects, perhaps, a top tier of high priority, middle priority, and lower priority projects, or something like that, that doesn't give us into pitting one project against another. If we think that there are several in a grouping that might be deserving of city attention. So, but just to the question, since there clearly isn't staff here to talk about that part of the report and staff direction, I'd like to know kind of who is our point person in the finance department that's assisting on the project.
I would as well. I don't know, Ms. Griffith or Mr. Ruff, your first day. I don't know if you're the guy. Mr. Cronk,
sure.
Whoever wants to lead this, Mr. Ablin, somebody. Sure. Who's our point person?
Chair Quincy, Council Vice President Glidden. Certainly on the first part, the tax increment financing part of the report, I know that Sandy Christensen, our Deputy CFO, has been working closely with CPAD, and she would be the initial point. But again, as we get our new CFO on board, they'll be working closely going forward. So at this point in time, though, Sandy Christensen would have the most information.
Okay. Further questions, Council Vice President? Do you have anything? Okay, Councilmember Bender.
Thank you, Mr. Chair. As you mentioned, I attended the CD committee, which I don't serve on, and I was a little actually taken aback by the original motion and discussion that followed. But I guess I would just note that maybe to Council Vice President's point, this item number 2 on the motion that was sort of written verbally in the committee there says to list top 3 major development projects in ranked order. And I will reiterate what I said at the CD committee, which is that in my opinion, we're not at a point where we should be doing that with the information that we have. Some of the critical pieces of information that I would like to have before making those decisions would be, what is the timeline of these projects? Some of them may not even compete with each other. What is the level of certainty for each project? Some may need small amounts of funding just to keep them going in the planning phases, and they may be on a very long timeline. What is the amount of funding we may be anticipated to spend on each project? What is the anticipated tax revenue back? Some projects in parts of the city where the market isn't as weak may require a small amount of funding to actually get back a lot of tax revenue. They may actually be good investments for the city just from a purely financial standpoint. Whereas projects in other parts of the city, we may decide to invest funding that we would never get back, knowing that they're meeting other priorities and criteria. And so it was my opinion then, and I hold that now, that this sort of making the decision that we're going to choose 3 priorities in ranked order may not be the end of the world, but seems to me premature. And I guess I would prefer that we had more information, even just about the timelines of the projects that are important to council members here. Probably doesn't, frankly, impact anything in my ward, but may in other council members' wards.
Councilmember Palmisano.
Mr. Chair, I appreciate the discussion that we're having about this. I'm just a little bit confused as to what the best step is forward. If the ask on the table was to, at first I thought it was to make sure we captured this staff direction and added it to this motion, but I'm not sure what my colleagues might suggest is the best next step from a Ways and Means perspective. And maybe it's just to wait until the CDRS discussion. It sounds like, Councilmember Bender, you might have some other thoughts about it that would be most appropriate for Ways and Means. I'm just open, but I'm a little bit confused, and I just wanted to voice that.
Yeah, I'm a little stumped as well. Councilmember Bender, you have a thought.
Thank you, Mr. Chair. I actually hadn't seen the staff direction that came out of the CD committee until Council Vice President asked for it just now. And so I hadn't realized that the motion included the ranking. I think it might be best to, certainly if someone here wanted to amend the staff direction, we could do that as a committee. I would suggest I may follow up with the author of the original motion myself just to understand what was the thinking behind this top 3 portion. So that's where I'm at.
Okay,
I also didn't realize there wasn't going to be any staff here to
yeah.
catch us up.
Let's do this if we might. I'm going to suggest we move forward with a no recommendation on this item so we can get it in front of the council. And then we can deal with this in the interim, whether this needs to be something that would be pulled off for further discussion or amendment at the council meeting. Does anybody have any opposition to that? All those in favor of forwarding without recommendation, please signify by saying aye.
Aye.
And opposed? So we'll do that. And we'll be taking it up probably as early as this afternoon or by the committee of the whole so we can have a conversation. Really good. Thank you. The next item, as we're moving up, I believe, is items number 10 and 11. I guess we could do kind of these kind of things simultaneously or not. Let's take a look at it as the financial status report first. This is the fourth quarter report. Ms. Griffith, if you could perhaps introduce it a little bit and then go to specific questions from council members.
Actually, I have a
She has a real specific question. I'm going to have Council Vice President Glidden.
Well, I just wanted to weigh in because I guess my request is not just that this be driven by questions, but we kind of get a more fulsome presentation on this extremely major item for the city to consider. And I hope that, that we're able to kind of get the benefit of staff's expertise in presenting this information, and then that would help us non-finance professionals be able to do our best job to ask questions.
Ms. Griffith? You want to push the button so you can get your mic on?
Sorry. Chair Quincy and Councilmember Glidden and members of the committee. At this time, because it is a receive and file, we have not prepared a presentation per se. I can answer questions. I can give you an overview. The overview is outlined pretty clearly in the executive summary. And if you look at the financial analysis report that's on pages 3 and 4 of the report, the schedule, that works collectively with the executive summary. I can give some points, realizing that this particular statement, whenever we do the quarterly report, it is a point in time. In other words, it's where we were at on December 31st at 2015, and things have changed since then. So we are always looking forward as we prepare this report to what's coming up so that we can be prepared financially. If you want me to proceed, how do you want me to proceed?
I'd like you to, if I could, I'm just guessing here and feel free to add to it. But go ahead and read through the overview. I think we're looking at fund balances where we're at. So do the highlights, and then if we can look at and focus on the general fund first, and then we'll deal with any questions out of the general fund as we move to the other fund items.
Thank you, Councilmember Quincy. What we usually do in each of these is we talk in general about the financial status of the city, and it's obvious if you look at the fund balances and the cash balances that we continue to remain stable. We continue to be in a positive balances in both fund balance and cash balance, which are two of the primary things we look at in this report. If we get into this general fund in particular, the general fund of the city, it's used to account for all financial resources except those required to be accounted for elsewhere, which is what general funds do in all governments. The fund balance at year end was $106.3 million, which is an increase of $3.9 million over last year, over 2014. The ending fund balance in 2014 was $102.4 million. The interesting thing about fund balance is that its increase this year over 2014 is still $8.1 million or 11.6% lower than, or is less than the normal, it's less than the average that we have had over the last 4 years. So what we're trying to say is that the fund balance is starting to decline somewhat. And it's not because we are declining as a city, it's because the development activity and everything that we've been experiencing over the last 3 or 4 years is starting to come down a little bit as the big projects that they're working on start to be finished and completed, like the stadium and those types of things. So that's what we're starting to experience. The fund balance we had originally included in the general fund for the 2015 budget a $17.7 million use of fund balance. What ended up happening is that we received higher than expected revenues of about $10.2 million and higher in revenues, particularly in our non-tax license and license and
Permits.
fee permits. I'm sorry, license and permit revenues, as well as this year we also received quite a bit more in sales tax and local taxes than we had anticipated. This is due again to the development activity and economic improvements that occurred in the downtown area and is a positive thing. The other area that we showed that it compares to budget was our expenses on all of the departments. All of the departments came in under budget for the most part. There's a couple that were just at budget. And the underspending was significant in some places. Some of these were due primarily to not being able to work on the CARS projects that they had originally included in their budget as planned, which is why we have some of the fund balances that we have left over to spend. And the other areas that we had were vacancy savings, the normal kind of things that happen during the year. So we ended up underspending our budget by $10.6 million. So what we're looking at is if you take all of these and offset them against the 17.7 plan use of fund balance, you end up with a $3.9 million increase in our fund balance over the last year. What we're looking at, and I think this is something that we are seeing in this report also, as you look at the cash balance, and we have this $117 million cash balance, which is pretty high. And one of the reasons why is because, of course, we get a lot of our revenue right at the end of the year. We get property tax, and we get, and it hasn't been spent yet. We get some of the LGA, we get some of these other very high revenue collections right at the end of the year. Most of that money is to be used for our first 6 months of operation into the next year. In addition to that, we're talking about a use of fund balance next year of $24 million that was put into the budget. We're looking at a rollover request for $4.2 million. We're looking at $5.6 million at year end, where our payables exceeded our receivables at that point in time, which meant there were money that we needed to spend right away. And when I went to look today at where we're at fund balance wise and cash wise, right now in the general fund, we are at a fund balance of I'm sorry, I'm going to check my numbers. We are at a fund balance of $55 million and a cash balance of $60 million. So until we get the property tax revenues in the middle of the year and some of these other things, we need to be mindful that we just don't have a lot of money to be spending right now, and we need to be keeping that in mind as we go along. The other thing that's going to be happening with all of our development activity and that type of thing is, though we've been receiving the permit and fee revenue, we are now going to be starting to incur the costs of investigation and looking at the projects and doing the work that needs to be done to make sure that the permits were handled properly and that they've done the work that they said they were going to do in those permits and that it's properly done and that type of thing. So that type of work is going to be starting. So there is going to be some higher costs in those departments, reg services and CPAD, to cover those costs of doing that. So this is why when we look at this, we want to make sure that from your perspective, you realize that it is a point in time, not just how we're going to be on an ongoing basis, and that we fluctuate up and down as we do throughout the year. The other funds, if you look at the Special Revenue Fund, which is primarily the Convention Center, the Arena Fund, which is the Target Center, and then several smaller ones, and then CPAD also, along with our grant funds. So what we have in there is primarily the Convention Center and Arena Fund, both coming in, again, under their expected spending. They didn't spend as much. They each received higher than expected revenues in that they had very robust years as far as their entertainment and the number of activities and things that they had going on at each of these places. So they did very well. And they also had, and I think this is more important, again, an underspending of their capital expenditures. They weren't able to get their projects done quite as fast as they thought they were going to. So again, they came out ahead of what was expected and ahead of last year. But again, there is some commitment to spending those monies on some of the capital improvements that they needed to make that they just weren't able to get done at this point in time. This is all leading to our rollover requests, of course, both in the general fund and special revenue funds and some of the other funds, is that many of the departments were unable to get to or complete the expected work that they wanted to do on their CARS projects, which are their smaller capital projects like the technology projects, fleet in their cases, purchasing the fleet vehicles, that type of thing. Not so much because they just weren't trying to get it done, because they weren't able to get through all the processes they needed to get through and get the POs issued that they needed to and that type of thing. So that's what we're working on. As far as the other funds, the enterprise or the internal service funds and the enterprise funds, the internal service funds are doing well. We've had over the past many years, it's been since I think 2010, a work plan in process for most of the internal service funds because they've had a great deal of difficulty ensuring that they get their costs out and allocated in a way that ensures that they get the right amount of revenue coming in from all the divisions and departments to cover their costs. And we've done a much better job of that. We've also given them some infusion of cash from the general fund and from other funds that have been approved by all of you so that they can get on the right foot. And actually, they are all doing very well and maintaining as they go along. And so a lot of work has been done. Property Services has a lot of work that they have in place to do on a variety of facilities and buildings. IT has a number of projects under in their process. Again, they're working on huge enterprise kind of systems that we're working on and updates along with some other things. So it really is beneficial that all of them are doing well. And our final fund is the enterprise funds. Again, these are the utilities primarily and parking. All are doing well. They all have cash funds and their fund balances are positive. They're above what is required for each of the funds. They are in the process of doing a lot of infrastructure maintenance and upgrades and that type of thing. They're utilizing cash rather than borrowing. So their cash balances tend to go down, but their fund balances or net positions tend to go up. In this year, for 2015, there has been a reporting change required by the GASB, the Governmental Accounting Standards Board, that we that require that we show in our funds the long-term pension liabilities that we have not previously had to report. So each of those internal service funds and the enterprise funds were able to handle that without creating huge negative fund balances and that type of thing, because it was a significant amount of money. When you see the report in the comprehensive annual financial report on the city, you will see that the general fund, the governmental funds also had a significant amount that they have to record as an obligation, and there will be some consequence to that. It is not something we have to pay out. It is just something we have to record as a liability. So that's sort of the status of everything.
Thank you very much, Council Vice President.
Thanks, Mr. Chair. I might just ask a couple questions, and then I think I will ask if we could please have a more formal presentation of this report at our next Ways and Means meeting. I do think it's really important. So it's kind of a big picture question that I have, and it relates to kind of a lot of the comments that you made about the health of our funds and some of the more particulars. And I think the big picture question that is raised by reports is when we have healthy balances and these kinds of things, the question is, are we right-sizing our taxing authority with what we need to run the city according to the budget decisions that were made in the budget process? So in other words, are we collecting more than we need to collect, or are we right-sized? And so I just want to make sure I kind of put that question out there, because I think especially when we see this end of the year report and we haven't had the opportunity of discussion and presentation on what does it mean to get the end of the year report, and how does that relate to the year in full as opposed to just looking at a picture in time. I think it's easy to overestimate what does it mean to have your fund balance at X or Y rate. And again, I'm not a finance professional, so I don't want to make assumptions. I want to ask questions and be able to kind of have some information. So as an example, I understand that we have a requirement or a recommendation from our bonding agencies about what our fund balance should be. And maybe could you just remind us of that and then say where we're at in terms of the fund balance in relation to that, those best practices?
Councilmember Quincy and Councilmember Glidden. Where we're at is in order to be acceptable, I think, and to be well received by the bond rating agencies for our debt, and to make sure the debt is kept at a reasonable level as far as interest in that, is we end up using as our basis as what a minimum that we want to keep in our balance is 17% of the next year's operating expenditures. And in this case, at the end of 2015, it's 17% of the 2016 operating expenditures in the general fund. That amount, if you look on page 2, is the general fund expenditure budget for 2016 is $488.2 million. 17% of that is $83 million. And if you look at our fund balance, obviously it looks like we're quite a bit higher than that. But you also noted, as I said just now, we're down to $60 million. So we're really not, or down to $55.2 million in fund balance, which is well below that. What happens is on this $83 million, as I was kind of talking about at year end, what we're looking at is we're going to be using $24 million of our budget that we have, and we're going to be using the year-end balance for the use of fund balance that we talked about in the adopted council 2016 budget. We're going to be using, if we approve this, $4.2 million in rolling over, and which makes sense to use that and to fund that. So we have $4.2 million. In addition to that, we have, like I said, our obligations that were there at year end that exceeded our receipts at the time, our receivables at the time. So what we end up having is, as we break this down, we're going to end up with slightly less at this point in time at the end of the year, $78.1 million in fund balance, which is really available. And that's below the minimum that we're really wanting to maintain. So the point is, as throughout the years, we try and maintain that balance. It's really important that at year end, we have the balance, and we expect revenues to come in during the year. As far as right sizing the budget, we have been trying to work on that and work with the agencies to do that. In particular, on the revenue side, it was something that departments continue to, because we're not real sure about all of our revenues, especially things like charges for services and that type of thing. We don't know from year to year what our revenues are going to be as far as that work, because if we have to do all of our work on the streets for our own city, as opposed to doing work, say, for utility cuts and that type of thing, we're going to be getting less in charges for services. So that's something that's an unknown. We have worked very hard to continue to increase our revenue budgets to match more with the actual amounts that are going to be coming in. So this year, there were a number of changes for 2015 that were made to ensure that we were moving up the revenue estimates, just like we did in 2016's budget also. So this is something we're very cognizant of, and that's why management and budget, Sandy Christensen and her group, make sure that when we receive the information from the departments, that we also put some practicality and reality into the estimates too.
So I had one more question, then I know others had some questions. So this is actually a question that I heard from another council member, and so I thought I would just raise it, so you know it's not my originated question or idea. So it has to do with our cash balance, and I think that the return back on our cash balance was something under 1% in the report, and the question is there more we could be doing, again, using the best practices that guide your actions to get a better return on cash balance, anyway, I don't know all the ins and outs of that, but that was a question, knowing that sometimes we have a large cash balance.
Chair Quincy and Councilmember Glidden, probably at this point in time, I'm reaching my limit of as much knowledge as I know on this, and get back to you on that. I think this has been the percentage we've received in the last few years. It is starting to go up because the economy is starting to do better, and I think part of that was the economy since 2008, and in the last several years, the interest return on our investments is not as high as it's been in the past. But the other thing is we also are required to invest fairly conservatively. And that is something we are looking at, and how we can maybe improve that. And that's something we would have to work with the state on.
Yeah, I just needed to clarify that a little bit more. We are we're very prescriptive on what we can invest in it now. It has to be in bonds. We don't have the luxury of going out and taking additional risk into the equity markets or private markets, and that's by state law. But that doesn't mean that we shouldn't pursue other opportunities. The other thing to recognize is as you're tying up money in investments, you're tying up money that couldn't be used for cash and for other resources. So how much could we actually apply for long-term investments to do those longer-term payoffs if we're able to get state law changed? So there's a lot to consider about the liquidity of the financial product and having cash available to be able to use it when we need it, as well as the protecting that asset of the city's taxpayers, so we're not making speculative investment decisions and putting funds at risk. So it's a very complicated process, and something I continue to work with the city treasurer, and we'll look forward to talking to the Mr. Ruff and others as we continue to investigate whether that's something we should pursue and at what risk are we willing to tolerate. Additional questions? I see Councilmember Bender had her question up.
Thank you, Mr. Chair. I think this was very helpful. I also would echo that it'd be great to have more of a presentation and chance to ask some more questions about this. Maybe just to put it sort of in layperson's terms, you know, when I think of household's checking account, you may have a certain amount of money in it, but you know you have to pay your mortgage and maybe your car payment or insurance or whatever. So Could you talk about our budget in maybe that sort of layperson's terms? So we have a fund balance, but how much of that is already programmed for our equivalent of mortgage and car payments and all the things that we put in our budget? And how much is extra? And then since I understand that some of the extra revenue that we've had come in is related to permits and fees, you touched on this, but I wanted to understand, I think I'm right that we don't tie that directly to the costs. Is that correct? Well, maybe I'll ask that as a follow-up question. My first question is kind of a large question, so I'll ask that one first, and maybe I'll follow up about the permits and fees.
Councilmember or Chair Quincy and Councilmember Bender, what happens in the general fund in particular, because it is general, any resources we receive and revenue we book in the general fund is general to the whole fund. It is not for specific purposes. And as a result, we end up utilizing the money the best way we see fit as we go through the budget process and that type of thing. And each department then provides us with their anticipated budget for that, which is each one of them within the general fund has the ability to get appropriation that they need. And that appropriation in the general fund is funded. In other funds, it isn't. Or it's assumed it's to be funded. In other funds, you may have to make sure you get fee revenue or that the allocation from in the internal service funds come in correctly and everything, that you have the revenue to meet before you can just spend the money. So even though you have the appropriation, which gives you the authorization to spend, which is different than a lot of places, then you need to also have the funding for that. And only in the general fund does the appropriation essentially give the departments the funding that they're supposed to have. So if they don't spend it all during the year, not intentionally, but because they may have vacancy savings or they may have savings of some kind, or they just can't get a project done like they thought they were going to and that type of thing, then we have the process for the rollovers that allow them to not to roll over in the general fund, not only the appropriation authority, in other words, we're just saying we're going to increase your authority in the next year, but the other side of that is in the general fund, you also get funding for that appropriation. Sorry. So what happens is all we do, and I was trying to answer your question, I'm trying to look at it as just a checkbook. Our cash balance in the general fund is pretty much the same thing as what our fund balance is. The differences are a few receivable, payable kind of things, but there isn't a lot of difference between the general fund and the cash and the fund balance, other than we get a lot of cash at year end, and so it may appear that way. So you have $117 million in cash, which is more or less the same as the fund balance, with a few exceptions of receivables and payables, non-cash items. And all we're saying is that cash has to last us for another 6 months until we get more cash in. And we're going to get other cash in. I mean, there's other revenues that we get. There's, as we start working in the spring and summer, we'll start getting some of our charges for services and those types of things. We have some other sources of revenue, obviously, that come in during the year. We have grant revenues that come, or not grant revenues, but other revenues that come in during that first part of the year to help us. But we have just ongoing costs. And one of the things we have decided, like you might do at home, is we want to make sure that in our savings account is an amount to ensure that we're not if something drastic happens, like in 2010 when our LGA was cut by a significant amount of money, then we're able to handle those possibilities. If we were to have an emergency, if there was to be some kind of something happen that was unexpected, we have an amount in our fund balance to help us, or our savings account, I guess, to help us through that time. And the reason why the bond rating agencies like 17% is because of and why we changed it to that is that's kind of the number they feel the most comfortable with. And it's really important that we get the right rating from the bond rating agencies, because that's what keeps our debt down, our interest costs down, and allows us to, we've been able to issue debt when we've issued it at a fairly low rate over the last few years. And that's been both to the benefit of the, or been because of the work done by our management and budget people and that type of thing in issuing the bonds. So I guess that's all I can tell you. I mean, we have costs that we know what they're going to be based on the budget. And if they don't quite turn out that same way, we keep tabs on it during the year, making sure that we're talking to the departments, finding out whether they're going to be underspending or overspending throughout the year. So we try and keep on top of it during the year. The areas that are the biggest areas of that we have ups and downs and have greater impact on our financials are the police and fire. Obviously, they're the largest organizations within our city, and then also public works. And this year, for example, we had almost no snow events. So their budget that they are trying to budget for an average over the last several years, they were way underspent on that because we just didn't have any costs incurred there. But that was offset by a few other changes in what happened with their projects and that type of thing. So.
Yeah. And we don't know if it's going to snow in October, November,
Yeah,
or December of this year yet. So
we're always hoping all the way through December.
I'm happy to author a resolution banning snow for the rest of the year, but I don't think that'll really go.
It is very difficult to some degree trying to estimate and project, and it takes a lot of people together working on coming up with what the budget should be for the year based on that.
Additional questions on this item, or could we just continue to roll over this conversation into item number 10, which is our rollover conversation? Ms. Griffith, would you like to set up the rollover? Not yet, because I think these are all kind of connected, really. But the rollover item talks about amending general appropriation. You discussed it a little bit earlier. Mr. Abelin, if you'd like to weigh in at any time on this topic as well as it relates to bonding and our debt capacity. But Ms. Griffith, is there anything on the rollover that you'd like to start us off with?
Chair Quincy, members of the committee, the rollover process is something we do every year. What we usually do, and this is something that's authorized in the financial plans, financial policies, I'm sorry. And if you look at the RCA, it talks about what criteria we use and what has to be used in order to roll over. And if you notice, and the reason why I talk about it in particular here is this year we had significant underspending in some cases in some of the departments. And part of that was primarily because they had put into their budget and had approved spending for specific cars, which is the capital asset request system. And it's for the smaller technology projects, smaller than CLIC, in other words. Those are more the infrastructure type of capital projects. So we're talking about technology projects, we're talking about equipment, we're talking about fleet vehicles, some of those kinds of things that we usually roll over. And what we do is we roll over the appropriation that is left over and unspent, and at their request, and it has to meet the 5 criteria we have here, which is that it's a valid encumbrance, that it's a one-time expenditure, not a recurring budget item, that it have a purpose consistent with the department's business plan and is included as part of their planned expenditures for the year, that they have a budget year appropriation balance available, which is what we just talked about, and that they have a positive fund financial. Positive. She has this backwards.
They have to have leftover money.
Positive financial fund, a fund balance. So in their department. So what happens is we get all of their requests. They have to, in their requests, each department has to say what it why they meet the criteria and what they want to use it for. And we go through and vet this and approve what they want to do or not. And then we forward to you what we agree are the ones that are valid. So we have the general fund. If you look in the resolution and schedule, on the schedule attached, we have the general fund amount, which includes, by the way, the rollover of the council ward budgets in there, which by law ordinance they're allowed to roll over. So we have a $4.2 million general fund rollover request from 2015 to 2016. Then several of the departments have in their other funds rollover requests. That this is where the total gets so large, it sounds huge, up to the 46.9 million or the 47 million. So most of that is in the other funds that we're looking at as far as capital project work where there's open POs, the special revenue fund in CPED, and that is a separate schedule that's provided. CPED has in its special revenue funds and in the TIF funds in particular a number of projects, the long-term development projects that they're working on. And so they go through and they have what was originally authorized in that area and in that particular fund. And if they haven't spent it all by the end of the year, then they want to roll forward. In the past, we've rolled forward the whole balance that was remaining. What we've had them do in the last couple of years is actually look at what they need for the next year in addition to what's already budgeted for them in those particular funds. So we've had them right size, I think, their requests, so it's not just rolling over and never ever finishing or ending the rollover process. So this is the amount that they need to roll over of the balances that are remaining in each of the funds.
Ms. Griffith, real quickly, what would happen? I'm sure departments traditionally will ask for a rollover request for a dollar amount to be rolled over for a future year. Finance says this doesn't fit the criteria. What happens to those excess funds from a department budget that are not granted for a rollover into the next year's budget?
Councilmember Quincy, they just go into the fund balance of that particular fund. So it's available. It's not like it's lost forever,
Right.
but it is available for projects or things that come up during the year. And if they weren't successful in rolling it over for that particular purpose, and if their budget cannot handle what they want to do, then they have to come before council and get additional appropriation authority.
Thank you. Council Vice President Glidden.
Thanks, Mr. Chair. So I had a couple questions about the rollover recommendation coming to us. I guess the first one is, did all of the requests that met the financial policy criteria make it on this list? Or was there some review and vetting of the projects that met the minimum criteria? Again, because you need to match up what's available funds with requests that are coming from departments and whether those requests, of course, meet policy.
Chair Quincy, Councilmember Glidden, I don't have a lot of knowledge about all the detail. There were a couple items that did not meet the criteria that we did not forward. There are a couple small things that we know people can handle in the next year's budget, and those would not have been forwarded. Generally, this reappropriation process or this rollover should not be focused on every $1,000 that you want to spend, because there is enough flexibility, as you can see, in most people's budgets or most departments' budgets during the year, and we try and monitor that with them. if something should go awry, we have the contingency funds that we appropriate each year and that type of thing that will help them. So it just allows us to maybe manage a little bit better.
Okay. So with the exceptions of those things, the couple items that didn't meet criteria or the other things that most likely departments should be able to accommodate within budget, they're low cost items. We're kind of seeing this as a list that was requested.
Right.
Okay. Well, it's just kind of a basic question that I had. That's it then.
Thank you. Any additional questions on the rollover topic? Not seeing any. Good. Well, thank you very much. It's been a great discussion. Mr. Abelin, if you've got anything, now would be a time. If not, don't feel obligated. I was just giving you the opportunity on either of those topics.
Chair Quincy and council members, Mike Abelin from Finance. I'm just going to reiterate some of the things maybe that Connie said in terms of, if you look at the original budget that's in the fourth quarter report for the general fund, you'll see that total revenues were budgeted at around $450 million and expenses were budgeted for about $463. So at the point in time that we began the year for 15, there was a planned use of fund balance because we had such healthy fund balances. And so that's great. But then we actually exceeded the financial performance of that, where our revenues came in higher and our expenditures came in even lower. So that gave rise to, obviously, the dollars to be able to do these rollovers without any negative consequences to next year's budget development process. So there's certainly healthy balances that should be allowed or available, I should say, for the development of the 2017 budget, even while allowing for these rollovers. So that was one comment. The other thing, this is back to the investment of cash. The question was asked, can we earn a higher return? We can earn a higher return, but then we have to take on more risk or structure our investments to longer term investments that pay higher interest rates. And sometimes we can do that and sometimes we can't, depending on our cash flow needs. One thing I do as the debt guy is we have more expense as an interest rate on our debt service than we are earning on our investable cash right now. So whenever I have opportunities to prepay debt, I take those opportunities because that's a guaranteed return. It's risk-free. So I continue to do those things to help monitor that cash balance and use it in a way that's strategic for the city. That's about the only things I had to add.
There was a comment earlier, and perhaps you'd like to add to that, related to our bond ratings, and especially with the new GASB rules on pension issues, Affordable Care Act implications. Do you want to offer anything about how that's going to affect bond ratings or what we need to be mindful of as we plan?
Yeah, Chair Quincy and members, Connie had mentioned the 17% fund balance is what we're targeting right now. And she did mention correctly that is a minimum that AAA rated cities are supposed to have on deposit at a point in time, usually year end is when it's measured, because that's when you have your final financial information. So we are in excess of 17%. We're comfortable making that 17% minimum. But in conversations with Moody's, a lot of cities that are AAA actually are carrying 25 to 30% fund balances in their general fund. And the rating agencies, of course, think that's even much more favorable than us, right? And we take a little bit different approach here. We think we can manage those balances very nicely and take advantage of, providing services to the best that we can for our residents, as well as, keeping our debt under control and things like that. So in terms of those pension liabilities and things that we have to now put on our books, they are a concern of rating agencies. We do have large unfunded liabilities in the para pension plan that we're responsible for a portion of, and those are having to go on our books now, and they do need to be paid for over time. So this is the first year where those balances have to be brought on our statements, and they will impact our net financial position. We are still positive. We are still healthy, but they are a concern of rating agencies, and we are, doing what we can to manage that long term. And sometimes these excess balances we have in certain funds or whatever help to show the strength of the city, even when we're at the minimum of 17%. We can say, we're not one of those cities that feels we need to have 30% on reserve and fund balances, but we do have a lot of cash. We do take a lot of proactive long-term planning steps to remain healthy. And yes, these are liabilities that we will have to pay over time, but we're well capitalized and do things to ensure that we're able to meet those demands as they actually come due. So I think we're doing everything we can to ensure the safety of our balances and our credit rating.
Very good. Thank you, Mr. Eblin. Great. Not seeing any further comments on these two items. We have two different items. One is the financial status report, which is a receive and file, and item number 10, which is the rollover. This is a resolution amending the 2016 general appropriation to roll over funds from 2015-2016. And then I think there's obviously a appropriation of that, yes. So for both of those items, all those in favor, please signify by aye. Aye. Opposed? Great. Those two items carry as directed in the agenda. Seeing no further business, I think we are adjourned.